August 3rd, 2019, Thursday, guys, 13 market moves daily analysis. Tons of stuff happening today. Markets will eventually break out today, tomorrow, to all-time highs. Here's what's going on. We got a bit of a overreaction yesterday to what actually is the good news, because what Powell specifically said, it's the middle of the cycle. Guys, there's a huge difference. When they were cutting rates in 2001, 2007, okay, we were at the end of the damn cycle. He said the middle of the cycle. The market should be going through the roof, and yet the initial reaction is lower. Why? Because of what we discussed in the prior video. The market expected half a point of a cut. But it's better to be in the middle of a cycle with just a quarter point cut than at the end of the cycle with half of a point cut. That is if you are playing the bullish side of the market right now. So overall, I think the market will reevaluate the initial drop yesterday. We've calculated the drop. Yes, it's kind of pierced that level that we were calculating of 29.87. So far pre-market, we're right at 29.80s. And that's despite the fact that we got some negative news from China. Of course, there is no deal. Nobody expected the deal. But, you know, we could be just dropping on the lack of the deal or the lack of progress on the deal. But the market is holding up pretty strong after the drop yesterday. With that said, be prepared that the market will revisit the lows from yesterday, established in the last hour of the trading session of 29.58, followed by a fierce, fast move higher. We're observing what we're calculating is a move type of 13 move behavior. So it's not, we're not saying it's a move 13, but we're saying the behavior of the move 13. For those of you that studied the 13 markets move formula thoroughly, you understand that that move comes really, really fast. So I want everybody to be on their toes this morning, ready to buy that fast move lower, because it's going to be taking place on lower volume. When these fast moves that are a follow-through on the prior day move lower, when they take place, you want to buy those because the probability of actually breaking for some of these key levels is not very high. Okay, some crazy divergences. Jeff Bezos sells apparently $2 billion worth of Amazon stock, and figure this shit out. The stock is up $10 pre-market. So what that really tells us, guys, when you make observations like this, when actually the news that's supposed to be taking the stock down, the stock is not reacting in the same direction. Typically, when the owner sells 2 billion shares of its own stock, that's negative, right? The stock should be going down. But the reaction is exactly the opposite. It's kind of like, you know, when we got the Powell's middle cycle yesterday and the market started dropping, okay? And the exact opposite was supposed to be happening. Well, this morning we're getting this news that Jeff is selling his shares. Who knows? Maybe he just needs some extra money for a couple of hookers, or, you know, we don't know what's going on with his divorce deal, right? But, you know, I mean, we don't know the reason why he's selling. There may be nothing. So the market is probably not written into it. But with that said, we may get a reaction when the market is open. So I'm timing this reaction, guys, in Amazon. If this reaction comes quick in Amazon at the open, I am going to buy this dip. And that should be a pretty solid strategy, because overall what we're noticing on bad news, Amazon is up. You got Netflix up. You got pretty much everything. You got Apple climbing back up. All the tech stocks that have been on the sidelines, it looks like pre-market institutions are saying, hold on. What the hell happened yesterday? This news is actually good. We're not in a recession, but the Fed is cutting the rates. That's great. Hell, we don't know what the hell we were smoking yesterday. Let's buy the market today. So they are going to buy the market today. Maybe not as fast as we wish them to, but overall the market will grind higher today. With that said, there's a couple of trades that we're considering today, guys. All the infrastructure stocks, guys, they're still in place. So buy. Stay with the VMC MLM calls. As far as Apple calls, guys, it's the easiest trade. They will drive Apple shares to $230 over the course of the next 2 weeks. That's the easiest trade you can take. It is going to happen. Shopify, we're going to talk about this. This is a kind of a trade where the stock has run up substantially, so expect some profit taken at the open, followed by buying the dip behavior. Again, we are definitely adding to the BYD puts, and we are considering the trade on W, which is Wayfair. So here's the details. Okay, so why are we still bearish on BYD? Well, because yesterday, after hours, the company announced that it's pricing the secondary offer at only $160 a share. Therefore, pre-market so far, the stock dipped all the way to 175 at the point I'm recording this, bounced to 177. When a stock announces secondary offering at a certain price, expect the price of that stock to drop at least to that level or real close, like 160, 161, 162. So that's a given. That's going to take place. So if you've seen BYND opening, let's say, at 175, 177 level, buy puts and start closing them out when it hits 160. Now, in many instances, and considering the fact that this stock has had a substantial run, we actually got a solid case where it could actually hit 145, 150, 155. In other words, it could easily, on such an announcement, drop below the secondary offering price. And doesn't mean that it's going to stay there forever, but a reasonable drop under this price could actually materialize for a brief period of time at some point today or tomorrow. So be ready. Start taking profit when it hits 160 and leave some of the position on in the event it could dip another 10, 15 bucks from there. And we've analyzed, we didn't know they were going to do the secondary offering, right? But all we focused, guys, was the chart. So if you haven't taken charts of divergence course, guys, make sure, click the link below, go on the website, tradingoptionslive.com. Make sure you take the course because this pattern is explained in great detail. Okay, and honestly, anybody could have spotted this if you understood a bit of a correlation between BYND and TLRY and their behavior and understand these charts. So what we're expecting yesterday, remember we said there's going to be a second day down, and that's actually what's playing out today. But look, there's a third day there, but on the third day, looks like they're starting to buy. The stock hits the bottom, and then they start buying it. So you kind of, you want to close this position by tomorrow. So when we're talking about the drop, it doesn't mean that it cannot drop below 145. It just means once it gets to this level, 145, 160, to expect a further drop of 30, 40 bucks at that point would be unreasonable because, the stock is down from 235 to, let's say, 155 today. It's an $80 drop in 3 days. Take the gains and reinvest them. Consistent profit taking at the top part of the trading tunnel we've been noticing the last couple of days. So we set this level 29.87 for the tunnel. Okay, yesterday we briefly dipped to 29.58, but so far pre-market this morning I've been watching, we're steadily over this 29.80. Okay, 29.87. Well, once we got close to the 29.90 level, right? Some sellers started coming in again. But overall, if you connect the dots pre-market, you got 1, 2, 3. It's a solid uptrend. The market is grinding. The market is grinding higher. With that said, expect the market at the open to revisit this level quickly of 29.58. When we're saying 29.58, probably going to hit 29.60, 29.65. After that, expect a huge reversal to the upside. That's what's in the cards. And after that reversal, expect kind of this behavior, which remember, not so long ago, about 2 weeks ago, we're hitting this level 29.69.5, which coincides pretty much with the levels where we're trading between yesterday after hours and today pre-market. This would be the average right here at 29.70. Look what happens after that. Consistent grind higher, buying the dip behavior continues. So expect this behavior to repeat itself over the course of the next 2 weeks. Reversal coming lower in Shopify, I think, at the open. The reason being is the sell-off started a couple of days ago right here when it was hitting this 29. When it was hitting this 339, 340 level, pre-market on good news, it slightly exceeded that level and started to reverse it. So we think the reversal could actually come in back to this 330, 320 level. At that level right here, guys, if it does hit 320 after the open, which could happen rather fast, so that's why we're suggesting to buy puts first on Shopify. Don't always stay in this trade, maybe 15 to 30 minutes, buy puts, close them out when it gets closer to the 320 level, reverse the trade into calls, because if you study the history of Shopify, it has these reversals in Shopify. They come rather rapidly, okay? If you catch one, you don't have to invest a bunch of money to make a significant return. 500 bucks can make you $5,000 on Shopify today if you time it right. So watch the levels, be very close. And if you're getting at the 320 level and they're starting to buy the dip, just don't expect it to do this automatically. Just expect the grind higher and be careful when it gets back to this 339 level, because 339, 340, these are all-time highs. Ultimately, I think it'll go higher to 360 next week, but not necessarily, if you're trading options for this week. Just take some profits. It gets back to the 340 level. Probably the easiest trade. Buying W puts on intraday bounce, guys. So far, okay, the chart on W, if you look at the daily chart, weekly chart, super bearish. But it looks like initially on good news it popped and then it dropped. And currently trades at the time I'm recording this at 121.25. Basically, if we look at the chart, the strategy here, if you look at the history of the stock, it had this nice gap up right here. Back in right before March, and since then it's been kind of creating this series, this bearish series of lower highs, and so finally this gap lower is happening in pre-market, and we are right here with this orange dot, so we're at 121. So trading strategy here, if it moves higher on the bounce, let's say you're seeing that they're out coming in and buying the dip, I would come in and short the hell out of this thing anywhere under this 131 level, because that puts you, this orange line could actually become the resistance for the stock, which coincides with this 131, 130. It would still put you in a situation where it's going to be struggling to close against this gap. A lot of selling has been coming in on volume. As a matter of fact, if you look at the last time this gap happened was the last time we had some positive volume, strong volume. Since then, we had series of gaps lower. We're going to get another gap lower. This is going to be a stronger volume today, probably resembling the volume right here around the beginning of May. And it's going to have a very hard time closing this gap. So what you want to do is do exactly the opposite of buying the dip on Wayfair today. You want to wait till it bounces. Let's say start buying puts if it bounces to 125. Start buying adding more when it gets to 130, 131. Even if it goes, just say slightly above 131, 132. I would be buying puts anywhere from 125 to 132 level, expecting a reversal back to the 116. So that's your trade. Buy the bounce. Don't buy it at the open unless the bounce is happening at the open, right? So if it opens up at 129 when the market opens, yes, sure, start buying puts on this thing. Yesterday's market move, guys, I know I was projecting a 10, but I've taken a closer look. It's actually a 9 if you study it thoroughly. I know it's been probably a very confusing move to a lot of us. So I've taken some extra time to look into it. I did record it as a 9. Now, one thing we should know about the 9 moves, and the importance of the 9 moves, is they signify a high probability of a move 13 behavior on the next day. So the 2-day sequence is 12-9, and 12-9-13 seems like has the highest probability, but we're not in a downtrend market. We're in an uptrend market, so we are not going to get a 13 move, but we are going to get very, very likely a 13 move type behavior. So the 12-9 sequence, this is how it looks on the chart. The most important thing is the 5-day sequence here. 2, 1, 4, 12, 9. The most important thing about it is the fact that the next day, in most cases after move 9, the next day you will get a retest of prior low at the open. So don't panic, because you're sitting on calls right now, and the market is going to open, it's going to start dropping, and your heart is going to start beating really fast. If you're in a warm part of the world, you're probably going to want to take a shower because your armpits are going to get sweaty. You're going to be sweating your trades. You're going to be sitting there thinking, Jesus Christ, what the hell did I get in myself to here, Leonardo? Okay, so just sit tight. Okay, as a matter of fact, maybe a good idea not to look at your screen for the first 30, 45 minutes, because it's going to make a sharp drop, revisit yesterday's low, and a reverse high. Most notable part is going to do it on lower volume. So, and then you're going to see this drop and grind. Higher behavior is going to continue. It's been the dominant behavior, okay? But why do we think we can actually reverse? Because if you take a look at the 10-day chart, I don't think I actually inserted it in the slides, but if you take a look in your account at the 10-day chart, this level right here coincides with some prior support level. So I think this level of support will be bought, especially. So basically this morning, expect this. They're going to come in, retest this level. They're going to buy this level. And from there, we're going to get a consistent repetitive behavior of grinding higher. So next market move, which is today, we assign a high probability of a 7. So the market's going to dip. They will come in and buy the dip around the yesterday's lows. And from there, we should grind higher. So with that, clearly it makes sense to buy longer time expiration. So buy some for this week calls, but also buy calls for next week as well. So split your expirations for better results, just in case the move higher does not happen as quick as we'd like it to be. So VIX could still hit 11 handle today, depending on how quick the reversal is going to come in and how fast it's going to materialize, meaning at which point in the day. We get a quick reversal in the first 30 minutes. VIX is going to start dropping. Yesterday, it did break out of the tunnel. I don't think it's going to be sustainable because we didn't get very much above the tunnel. We try to close out this gap that was created in the last couple of weeks, but this is how this looks now. So we have a series of lower highs on the VIX. 1, 2, 3, hitting the 16.5. Look how quickly it reversed lower. The second time it ran higher, the market actually dropped lower. So you got a case of divergency here to where it should have gone higher because the market dropped lower, but it didn't. And so this morning so far, the market's holding strong, and we're down like a whole point on the VIX. So it tells me that maybe at the market open, there could be some volatility. We could maybe go back up to this 15.8. After that, expect a drop. That's what's in the cards. Key takeaways, guys. Buy the dip at the open. The dip should be on much lower volume compared to yesterday's dip, which is bullish. Buy intraday dip in Apple, Shopify, MLM, VMC, BKNG calls. Focus on next week expirations. And BYND puts at the open, guys. Now this one, you're better off buying for this week because, again, the major part of the move has already taken place. We're going to get one big move lower once the market opens, and at some point, the stock will catch a bid. But, you know, again, start taking profits at 160. Leave some of the position on in case it could completely unwind to the 145. Guys, with that said, have an awesome trading day. I'll catch you on the next trade tomorrow.